Bank Indonesia has also developed innovative payment systems to support the digital economy and digital finance. So big thank you once more to Stefania and Governor Perry for letting us in on their conversation. Well, I hope everyone is nice and warmed up. We're about to head into part 2 of our 6-part segment. Same question applies. How will the financial services sector respond in 2021? So I'm very excited to introduce my former colleague and friend, Bloomberg's Haslinda Amin. She will be moderating the next panel. It will feature a discussion among several heavy hitters in the financial world. Bill Winters, Group CEO of Standard Chartered, Piyush Gupta, CEO of DBS Bank, and Kelvin Choi, Chairman and Chief Executive Officer of AMTD Group. Now, expanding from the earlier fireside chat, this panel will discuss bigger questions around pandemic economics. We will look at changes in cross-border activity, the responses to expect from the financial sector, and the priorities and trade-offs that each of these global financial institutions will have to make currently and in the near future. So let's now go to Haslinda Amin and her panel of global finance leaders.
Sharon, thank you so much for that, and good to see you again. Good morning from the Lion City. Now, we've talked about how the pandemic has accelerated the digital transformation in the financial services industry. What would have taken 5 years took just 5 months, and some say that pace, that momentum will persist beyond the pandemic. The question really is, what does the second phase, the next phase of the transformation, how will it look like? Where are the gaps? What are the challenges? What will be achieved over the next 12 to 24 months? Let's kick it off with Piyush. Piyush, we talk about how there's been meaningful change in the financial services industry. When we look back 10 years from now, how would it be an inflection point? What conclusions will we be coming to?
So, Haslinda, first of all, it's a pleasure to be on this panel. And to dive straight into your question. So in my own view, what this year has done is accelerated a lot of stuff, secular trends that were already in place. It's less a question of a complete pivot. It is a question of what you said, 5 years worth of activity in 5 months. But that is quite seminal. It is quite important. The willingness of both companies and individuals to take to digital solutions in every industry, whether it's medtech or education tech and so on, has been profound. And that's true for financial services as well. So as a case in point, the fastest growing population for us in this last 6-8 months for use of digital solutions was the people over 60 years of age, 4x growth. Now, these people were holdouts. They're people who were skeptical or at least reluctant to switch because of natural anxieties. The second fastest growth in our population are migrant labor, so the underbanked. The third fastest growth is supply chains on the corporate side, both SMEs and digital supply chains. None of this is because technology got newly developed. It is because people's psyche changed, people's willingness to accept new forms of work changed. And as we look back, we will think of 2020, therefore the seminal year, where you saw a profound change in the pace at which people adopted stuff. And as a consequence, obviously, it will transform the way work gets done as we go forward.
Profound change, Bill. I mean, when you talk about appetite for all things digital, how convincing is that?
I think it's inevitable, and as Piyush said, I think what we've seen is an acceleration of existing quite discrete trends. All of the trends that Piyush mentioned, I would say also the inevitability of integration of basic financial services into broader digital ecosystems. So, the big tech companies of the world have been, I would say, flirting on the edges of finance, with a couple of big exceptions, China being the obvious example. But otherwise, it's been flirtation, mostly because of the desire to avoid the regulation, the hyper-regulation of the financial services sector, banks in particular. But the integration of finance into the day-to-day lives and the day-to-day consumer transactions, I think, has also been underway, but will accelerate as we come out the back end of this pandemic.
We talk about an acceleration, Kelvin. I mean, the response from AMTD, despite some expectations of a slowdown, you've gone on a spree when it comes to acquisitions. Take us through your response for the pandemic. I think you're muted. And that's the phrase for the pandemic, of course.
That's right.
No, we're still not hearing Kelvin. While we wait for Kelvin, perhaps I'll bring Piyush in. Piyush, what is the end game? You know, what should the full digitalization transformation look like?
I'm not sure that's an appropriate question because I don't think there is an end game. But if you ask me how things are going to evolve, it's quite clear that over the last decade or so, the technology industry, whether it's Google or Amazon or Facebook, has fundamentally changed, lifted the bar on what customers can expect to get in multiple industries. So a service at your fingertips at any time, in context, and frankly, that bar is now being applied to financial services as well. So you should, at the very minimum, expect that you should be able to be seamless, invisible, intuitive in your access to all kinds of financial services. The other thing these companies have done at scale is use data and artificial intelligence to provide insights and opportunities that human beings have not been able to. Well, you're going to see that. In fact, if I predict that the biggest thing you will see in financial services in the next 5 years is the impact of AI in our industry. The other technology solutions that have been on the anvil, distributed ledger technologies and blockchain. They've been around for a long period of time, but I do think you're getting to a tipping point where the exponential impact of a distributed ledger is going to start being visible in more and more use cases, trade finance, et cetera, maybe even digital currencies. I think we're seeing 5G and IoT roll out again on the cusp. That will also, again, strictly, quite substantially change the kinds of opportunities you get. With IoT, you can get machine-to-machine payments, for example. So I think you're going to continue to see a slew of change which comes down the pike. But it's never the end. So what do you do when you get more AR and VR? How do you make sure that the customer experience changes even more? I think you're going to see a lot more of this in years to come.
Where will we see it after this tipping point, Bill?
Yeah, as usual, I agree with everything that Piyush said.
You can't agree with what
but I'm going to add. I'm going to try to add. I mean, it's very hard to add to Piyush, but I'm going to try to add to Piyush. And my add will be, in addition to all this wonderful technical change that we're going to see, which is real, it is absolutely going to come. What form it will take, the winners and the losers, I think remains to be seen, but it's happening. But there will still be a very substantial role for the human being and the human interaction in areas where elements of trust and personal advice are necessary. So my forecast would be well after the point where the robo-advisors are able to give consistently better advice than human beings. Individuals will still, customers will still want to talk to a human being to validate their views. They want the intuition on top of the output from the machine. And more and more, that means that we've got to use AI and associated tools to enrich the qualities of our advisors, and that the advisors themselves will put the final stamp of approval in one way or other, or give that reassurance that a customer needs. So I think long after the machines are evidentially more capable than individual humans in particular decisions, humans will still have a real role to play. And that's when we think about the way that we're trying to position Standard Chartered Bank. On the one hand, we have to play in all those technical spaces that Piyush referred to, because that will be the way that I would say day-to-day transactions will be executed. I don't think customers will realize, really, whether they're dealing through a financial services platform or an e-commerce platform or a messaging platform, once we get closer to this end state. For important life decisions, and I would say that it's how do I think about my retirement? How do I think about the education of my children? How do I think about the purchase of my home and the protection of my savings for future generations? That's going to require a level of human input. I think that will be with us for certainly the rest of my life, and I expect beyond that.
So let me, since you're not going to like this, but I agree with Bill. But let me add one different dimension to that, and that's the future of work. So through the early part of the pandemic, the wisdom seemed to be that this is the end of the big office. Everybody is going to work in a distributed environment, all work off their screens. And I've been of the view from very early on that that's hard to happen, because what makes us human beings and what makes us social creatures is not easy to change so rapidly. The need to get together in physical, to touch and feel, to enjoy the ambiance of human interactions, not just for innovation and ideation, but just as a way of living, that's not going to disappear anytime soon. So I agree with Bill. It's not a black and white. So it's a binary situation where everything will switch. But I do think technology will make a more and more fundamental difference to the way things get done.
So what does that mean in terms of workers coming back to the office, working from home, more flexibility in terms of how your banks operate? Bill?
Absolutely. Look, I think like every large corporation, probably, maybe small corporations as well, we've done extensive surveying through this lockdown period. And there were some surprises. So for example, when we surveyed our colleagues in our global service center in Chennai and Bangalore, fully 85% said that they would highly value an element of flexibility. And we were a bit surprised because they tend to be colleagues of mine who have a less robust work environment at home. Oftentimes they've got extended family, especially during lockdown. Oftentimes they'll have kids. And we thought, surely they'll want to get to the office for respite, at least some of them. The answer was no, actually not. We'd much rather save the hour and a half each way in what can be a dangerous commute on a two-wheeler or whatever. And you guys have made some decent investments in us with proper laptops, ergonomic chairs, and the like. So if you can standardize that, we'd like to do 3 or 4 days a week at home. Now that necessarily means that we will have less demand for space in the office, and we'll reduce the commercial office footprint. But again, as Piyush has said, and I agree, it's very useful to have a convening center for people. It's not just for inducting new employees, although that it's critical for that. I think that socialization process into your corporate culture. It doesn't require face-to-face contact, but it's a lot easier if you've got that. But we also want to have spaces where people can come together to ideate, to collaborate. So I think the future of the office is going to be much more around collaboration spaces and much less around workspaces or workstations where people come in to do work that they could be doing remotely. And we're trying to add additional features as well. We've got arrangements with commercial office providers to create spokes outside of our central hub. So we find that many of our colleagues would love to work outside of the home and avoid the hour-and-a-half commute. So is there a way for us to take some commercial space closer to where groups of employees work? It could be a branch of ours, so it could be existing standard chartered real estate, which we've got plenty of around the world, but not always. Or it could be commercial space that we effectively hire by the day or by the hour. And just offering that kind of flexibility, we think will help get the most out of our employees and then help us put the most back into them.
Piyush, we talked about how the pandemic has accelerated the digital transformation within the space. There are gaps still, right? I mean, where are these gaps?
Well, we found early on, there are a lot of what I call last mile gaps. And the last mile gaps are basically because, like most people, we focused and prioritized on the big things that matter. The large payments, the large trade finance solutions and loans and so on. But when everybody's at home and everybody's working remote, then you find that the tail events, so the tail transactions that you've not catered to, those actually disrupt the employee journey or the customer journey. And so we actually doubled down. We had to double down and put in a lot of last mile fixes in the first few months just to make sure that the complete journey got done. You didn't sort of leave things hanging out there. So you have those kinds of gaps as an example. A large part of the gaps are actually at the customer end. So how do you make sure the customers are adequately equipped? Like many other banks, we've created a very compelling API platform. We have over 1,000 open APIs. But nevertheless, you have to work with customers, especially in the SME space and the corporate space, for them to adapt to this technology and to be able to use this technology at scale. So some of the gaps come from the customer side, some residual gaps in the banking space. Finally, part of the problem is a function of what is the infrastructure available in the country. And so you do see some differences. The countries which are better equipped in terms of financial infrastructures, it's easier to plug and create a complete ecosystem. Those that are not are more challenged. But even in that context, you take Singapore, we've known for some years that if you think of the trade finance infrastructure in Singapore, there are a lot of solutions, but they don't all come together. We have a national trade platform, we have a port platform, Port Trust, we have a platform for the depots. But when you look at the horizontal, there's still gaps and handoffs. And so we made a conscious effort as in a public-private partnership to try and bridge all those gaps So data flows seamlessly from one platform to the other platform. So that's another example of gaps that existed, but this was at the infrastructure level, not just at the corporate level or at the customer level.
Bill?
Yeah, I think one of the really interesting features of this pandemic period has been the I would say exponential increase in the demand from our customers for both real-time information and also but real-time information about their interactions with us and about the market as a whole, and then the melding of those two things together. So the idea that in times gone by you could suffice for some products and services with the old overnight batch. Simply doesn't work anymore. And to take something from being sort of batch run to being real time is a pretty substantial investment. And I'd say that there are many instances of last mile, some of which are as Piyush mentions, infrastructure in the financial system itself, some of which are inside our own organizations. And I think that if finding ways to get information to our customers, or maybe even the other way around, getting information to our own colleagues, that's at least as fast as what the customers could get themselves from some third-party source, which are becoming increasingly effective, I think presents many ongoing challenges. But exactly what we would hope in terms of getting customers in a position where they can respond to things more or less real time themselves.
The pandemic has forced all banks, all financial institutions to have a digital plan, whether you're a non-believer or a believer. But for you, Piyush, I mean, for DBS, it's always been ahead of the curve because of your vision earlier on. It's allowed all these laggards to play catch up. So how do you build your own competitive advantage?
As I said, we've been on this journey 6-7 years. To be told, a large part of our success comes from the fact that we re-architected our tech stack entirely. And that's not easy to do. It's a multi-year journey to move from legacy platforms to cloud-enabled and cloud-native platforms. We're today 99% done in terms of doing that. We're obviously a hybrid between on-prem, virtual private cloud, and public cloud. And so while many people have caught up in terms of connecting and being able to offer services to customers, whether the connectivity runs all the way through the middleware and the backend is an open question. And that difference, really the difference of the cost point as well as the speed to market that you can get. So I do think there is still some difference in our approach and what many banks have today. But as we go forward, I think, as I was alluding to before, one of the big differences over the next few years is going to be the use of artificial intelligence. And to get AI right, you've got to not only have the infrastructure, the culture, the data scientists, and so on, but you need to have the core raw material, which is data. To clean up the data and have the data infrastructure in place has taken us over 4 years. And I suspect that that's not an easy shift for a lot of companies to be able to do. The on-us data, the off-us data, the third-party data, the data access protocols, the culture around appropriateness of data use, and then building the models. Today, we have hundreds of AI models running in our bank. I'm not sure it's going to be that easy for people to play catch up on the AI journey. There are other things I talked about coming down the pipe, blockchains. We're doing a lot of blockchain-related stuff, a lot of labs around 5G and IoT. And so the trick with this is always to continue to stay ahead by leveraging and experimenting with newer stuff, even as people catch up with the basics.
Winners and losers, jury's still out. Bill.
So I know you weren't referring to Standard Chartered as a laggard, but and I'm happy to say it's wherever we started, where we've been able to get over the past 5 years, is to a pretty exciting place. And Standard Chartered's in a particular position. We don't have a natural home market. And as a result, we have some very important positions in key markets, Singapore being one, Hong Kong being another obvious one. But what we've been able to do is to position ourselves as a bit of a disruptor and a challenger in a number of markets. I say a bit of, I mean maybe a lot of a disruptor or a challenger. And part of that's out of necessity, right? And part of that is out of opportunity. And what we found, like for example, we launched a digital bank in Hong Kong a couple of months ago. I happened to be in Hong Kong when we launched it. It's getting sort of 4.8, 4.9 ratings in the App Store. That's on a scale of 5. This is maybe best in class. It's a brand new tech stack from bottom to top. But what really differentiates that bank relative to what other banks are offering is that we've done this in partnership. We partnered with Hong Kong Tel and Trip.com, two outstanding technical partners, but also with, between the three of us, we've got the full reach to the Hong Kong population, probably 2 times over. Obviously, with the possibility that at some point we could extend some of that into markets like China, perhaps through the Greater Bay Area, for example. A lot of regulatory allowances notwithstanding. But as Piyush mentions, the value of data and the value of being able to digest and process that data in a way to provide your customers with a better product and service is the key differentiator. And from our perspective, that will in many cases involve partners. So one day we'd love to have a virtual bank digital bank or whatever we call it in Singapore. As you know, we're a significantly rooted foreign bank as of a few months ago. And we would hope that over a period of time that would allow us to take a more and more active role, perhaps with partners and partners. So a similar sort of model. We're building a digital bank in Korea with Toss. We're building a digital bank in Taiwan with Line. We're launching banking as a service, as a banking as a service platform in Indonesia with e-commerce platforms, which we'll be sharing more detail on hopefully when we launch in the first quarter. So these are the kinds of things where you get access to vast amounts of data in excess of what you could have as a pure bank, which can provide some real differentiation. So are there opportunities for some of those laggards out there to leapfrog? Absolutely. Which is why actually we call internally we call our mobile banking app, which has been extremely well received, Leapfrog, because that's exactly what we hope to do with it.
What are your plans for that digital banking space in Singapore? I mean, just on Friday, Singapore announced the winners, the 4, including Ant and Grab. I mean, are you under more pressure now? Do you feel the pressure given that these digital banks are now going to be in operation?
No, we feel no pressure at all. We feel a ton of opportunity. And look, at the end of the day, if we think we can bring something that's incremental and valuable to our customers, then we think that we can carve out a niche. Early days in Hong Kong, and it is very early days, it appears that we can do that in a market that is otherwise quite competitive. Singapore is a very different market. You've got very, very strong players like DBS, OCBC, UOB, Citibank, HSBC, who don't seem to have exactly the same digital bank strategy as us, probably because they don't need to. For us, there's nothing but opportunity. And we'll figure out exactly the right way to exploit that opportunity when the
It's okay. The rumor has it, they'll announce it by year-end.
Your response, Piyush, I mean, what do you make of the new players, I guess, that have been identified, like Ant, like Grab? Your initial response?
Well, I've maintained all along, you have to respect and be wary of all forms of competition. And the reality is many of these new players bring a very different perspective to how to deal with digital banking. They have good technology. In many cases, they have access to large customer bases. Bill was talking about it. So that's obviously something you have to keep an eye on. And we have a healthy respect for all forms of competition. That having been said, as Bill alluded to, we've been on this journey for a period of time ourselves. And I've maintained several times, nobody has a monopoly on technology. It's not as if Google or Amazon and can get technology which DBS can't. It's all open source, and we've been dabbling and leveraging the same technology now for several years. Today, we have 7,500 engineers in the company. It's my single largest workforce, more than bankers in the company. So we like to call ourselves a tech company offering financial services. We have a full slew of applications. So we're in the payment space, in the remittances space, and financial planning, and wealth management, and investments, and SME, and merchant. There's really nothing much that is available out there that DBS does not provide in a very competitive and often cases a world-class kind of manner. And frankly, we have a DNA around how to offer good financial services. So we're fairly confident that we have what it takes to continue to be an effective competitor in this and most of the markets in which we operate.
Let's bring in Kelvin into the conversation. Kelvin, EMTD was among the bidders for this digital banking license, but it failed to do so. Does that change your, I guess, digital build-out here in Singapore? Does it change your priorities and your plans and strategy?
I presume that you can all hear me now. So I think, Hassananda and everyone, I think it's my great honor to be on this panel once again. I think, seeing faces like Winters and, different ones that I think we have been in similar panels, I think, for the past years. I think this year, I think it's especially important I think for the pandemic and also the new norm, and in fact we just tried that a bit, right? The technical problem, of connectivity in terms of how to actually bring us into the new norm or adapting to the new norm. In fact, the digital banking license is in fact something that we have been pursuing with our commitment to building a one-stop digital connected solutions platform, not only in Singapore, in Hong Kong, but across Asia and beyond. So we are very glad that early on last year, we partnered with Xiaomi to obtain the one of the 8 virtual banking license in Hong Kong. And now that I think for Singapore, a place very special for us because we set forth our digital everything to be headquartered globally in Singapore. So I could tell you right here, the results of the licenses, I think, wouldn't derail us from our commitment and undertaking by having Singapore as our hub. The center hub, for many things. One is for our digital overall businesses build out. Secondly, is for our overall talents cultivation, training, upskilling. And we are also very glad that yesterday night, we just rolled out the XC program together with Xiaomi and also the SMU and also the NUS University. So committing to digital finance leaders training for tomorrow in Singapore and beyond. And finally, I think we are very much committed to working closely with the local fintech community here. And you might have been noticing that we are investing a lot, I think, through some acquisitions, early on this year into FormalPay, into PolicyPal, into CapBridge. So there'll be a lot more of such companies, but we focus more into this very good fintech leaders, fintech talents, entrepreneurship that we bring all together into AMTD, that we are committing to building this one-stop digital hub out from Singapore.
One of the issues is a level playing field. There's a lot of concern whether the existing regulatory environment is sufficient to ensure a level playing field. Piyush?
Well, over the years, it has been an issue, particularly in countries like China, where a lot of the tech fins were able to benefit from regulatory arbitrage over a period of time. So also particularly true for the P2P lending industry, where thousands of P2P companies came in. And then as you saw over the last few years, again, thousands of them have shut down as the government then started putting some regulations around the space. It's been our view that at the end of the day, you do need to make sure that the financial system, for the sake of financial system stability, all players who can have a meaningful impact on the financial system should be seen through a common prism. And whether it's capital or liquidity or other kinds of macro prudential supervision policies, I do think that that's appropriate. At the same time, it's quite clear that in recent years, the regulators are beginning to take cognizance of this. And in China, for example, over the last couple of years, there's slowly been more regulatory processes put into place to try and create that kind of infrastructure. So to address the P2P space first, and then more recently, the payment companies as well. If you look at what the MAS has done, they've been very pragmatic and quite sensible all the way through. They've tried to make sure that there is a good regulatory architecture, Payment Services Act, regulations for any new players coming into the system. And even their regulations around digital banks, etc., are quite thoughtful. So I do think it's important. It's important for systemic stability, not just for level playing field sets of issues. But I do think that regulators are beginning to respond to that necessity.
Look like a bank, act like a bank, you are a bank, and regulate it like a bank.
Yeah, I've been very impressed by the thoughtfulness of both the regulators, both in Hong Kong and Singapore, so the two most recent entrants in sort of large-scale digital banking or virtual banking, to make sure that there is, in fact, a level playing field. One of the areas of concern, and I think it'll be a challenge for some time to come, is the whole notion of open banking and the way that the data is exchanged between the banking and the non-bank sector. So you take open banking in Europe, the non-bank community is able to access, I would say, extraordinary amounts of bank data. Banks are not able to access the comparable data coming back from some of these platforms, whether they're messaging platforms or e-commerce or otherwise. That's an unlevel playing field, fundamentally, and I think that is something that regulators over time will have to come around to addressing. But there's also systemic issues to be considered there, to the extent that, and then there's certainly consumer protection issues to be considered. At the end of the day, certainly I know there's a fear for banks in Europe that the ultimate deep pocket, if there is a case of fraud, where bank data is used by some third party for some illicit purpose, that the banks will somehow find themselves still on the hook. And that will just disincentivize banks from providing particular services to particular customers if they think that they're hanging with residual liability for some time to come. So I think this is a new and evolving area. I applaud the direction of travel in terms of open banking. I think this is something that the banks are simply going to have to get used to as a practical matter. But we do have to make sure that we thought through the second and third order consequences in each case.
Kelvin, your thoughts on fintech regulation?
I think it will be very much important to promote more of the traditional financial institutions to work closer with the fintech companies. I think in this new world or into the complete digital age, I think it's really about partnership approach would work to bring it, as we talk about open banking or one-stop solution as we are committed to do so. So I think over the years, I think we are very glad to be involved as a founding partner for establishing the ASEAN Financial Innovation Network and promoting open API. But at the same time, I think in terms of the proof of concept or more closer working together within the community. And I think earlier this year, to take advantage of the pandemic situation, that when everyone actually become more willingness and open mind towards change. So that is the opportunity that we take advantage, and under the guidance of the MAS, that we've been demonstrating resilience, but also support to anchor the fintech community, promoting their joining the open API and more of the proof of concept working together with the traditional financial institutions. So all this, I think, it's not just about a governmental approach. I think it's really about a government to private sectors and then into the general community to embracing all this.
Touch on digital currency, because Piyush, you touched on that earlier as well. I mean, just a year ago when Libra came to the fore, there was a lot of pushback. A year on, a lot of central banks are considering a digital currency. What's led to this mindset change, you think?
Well, I think the underlying notion that digital currency can substantially improve the settlement process cross-border, that is true. Because the traditional settlement process, which is a T+2 settlement process, is still archaic. It requires you to sort of use hubs and spokes to move money around. And digital currency using blockchain can actually dramatically improve that. The problem is quite simple, that when you have a third-party issuer of the coin, let's take Libra or anybody else, then that starts creating two sets of questions and doubts in the minds of regulators. The first is a substantive question around monetary policy. If somebody else owns the currency in your country, then are you still in control of your monetary policy? And therefore, as a nation state, as a sovereign, or as a central bank, how do you marry somebody else owning your currency to your needs to manage, easing, tightening monetary policy, setting up interest rate regimes? It's not obvious or easy. The other challenge, of course, is the challenge of AML and KYC. I mean, the entire financial system could be misused at scale if you don't have an architecture which protects against AML and KYC. So I think the challenge which Libra faced was it propped up questions in both of these areas which had not been resolved. Now, when you get to a situation where the central bank itself is issuing digital currency, you get the benefits of changing the settlement system without the risk of either monetary policy impact or an AML KYC regime. And therefore, I think a lot of central banks started coming to the conclusion that the best way to do this is to look at a central bank digital currency. So you get the benefits without throwing the baby out with the bathwater. As you know, today, a lot of central banks experimenting, BOE is involved, PBOC has a big agenda. We in Singapore with MAS have been experimenting with UBIN and the next generation and so on. So I do think you will find over the next few years that some kind of a network stitched together, but with central bank digital currencies at the core, could become a reality.
Inevitable, Bill?
Absolutely inevitable. And I think there's absolutely a role for central bank digital currencies as well as non-central bank sponsored digital currencies. So I think if you look at how Libra has evolved since the original launch, where there were elements of some perception that they were trying to issue something that's not linked to a fiat currency, where they might have some influence on monetary policy. They moved quite substantially away from that. I would say that now Libra is very focused on creating a payment platform that will address exactly the kinds of settlement issues that Piyush has talked about. And they've worked with people like us very closely to make sure that the access to that digital asset, that digital currency, has all the same standards as access to US dollars or Singapore dollars or anything else. So to the extent that the ecosystem is contained, so that the entry and exit is controlled by people that have similar sets of compliance standards to those who would have the similar standards with other currencies, I think this is a very useful incremental service to be providing our clients. But beyond that, I think Libra at the outset, I guess, will look something like a digital US dollar or maybe a digital euro or something like that over time. The really interesting applications for me, apart from improving the efficiency of the settlement systems, is to have currencies that don't match a currency in and of itself, but are intended to capture either a superset or a subset. So, for example, are there digital currencies that can be used only for specific types of projects? Let's just say they can only be used to trade in the voluntary carbon market, for example. That sort of blockchain-based, so underlying distributed ledger technology-based infrastructure to give the users, the buyers and sellers of that currency, confidence that the projects that they're effectively financing behind that are verified, they're standardized, they're executed by competent people, that there's ongoing monitoring. Those sorts of applications for a digital currency and creating a digital currency ecosystem is something that can't be replicated by a fiat currency or most likely by a central bank digital currency anytime soon, given the objectives of those central bank digital currencies. So I think there is a whole new world that's opening up for us, something that Standard Chartered has been very, very focused on developing. We'll have some really interesting news, I hope, in the next few days along these lines. And this to me is not the future, but it's a very important part of the future.
Kelvin, thoughts on digital currency and what that may mean for businesses, perhaps?
Yeah, absolutely. I think, I totally agree that I think for digital currencies, I think it's one of the major areas of focuses, I think for tech innovation, I think for the next age. But then ultimately, this will be a central bank driven process. But at the same time, I think the private sectors have a major role to play. I totally agree with Bill in terms of how to adopt and apply the digital currency in specific elements or particular areas. Taking capital market as an example, now that for many kinds of transactional or major settlements, connecting with different parts of the world for any global offering or transactional has been very much offline or in terms of very human labor oriented. So how to actually create something more digitally connected as the coins or the settlement currencies, for particular sets of capital market transactions or connecting in between the different exchanges are something that I think will be the opportunities or trends for next. And at the same time, I think not only the digital currencies, or in fact, we focus a lot into the digital assets or the digital medium. So how to actually house this or promote the transactional of it is really about the public exchange, or we call it the digital asset exchange. So we are very glad that early this year, we have the opportunity to partner and acquire CapBridge, of course, with the Singapore Exchange and also the Hong Kong Cyberport being shareholders of it. We are seeing how we can build CapBridge from Singapore, connecting to Greater Bay and connecting to the rest of the world. So I think a digital asset exchange, but truly global one, will be something that, out of our overall objectives, something that we are very keen to focus into next.
Could it, Piyush, upend a financial system backed by the US dollar?
So I think it's really hard to change the hegemony of the US dollar anytime soon. If you look back at history, the US became the world's biggest economy in the 1870s. The sterling continued to be the currency of choice for international economics till post-Second World War. So 70 to 80 years for the currency shift to take place. Now, you could argue it's a different world, and so these things can change more rapidly. But even today, if you look at the use of the US dollar for international trade and capital markets, it's still 70, 80%. Sometimes the euro is a second, but everything else is very small. So I wouldn't hold my breath about the end of US dollar dominance anytime soon. Having said that, if there is something that is going to start catalyzing a change, it could be digital. And I do think that if the Chinese government, PBOC, plays its cards right with the digital renminbi, I think that might accelerate the adoption of renminbi in the international markets as an international currency of trade and capital markets on the back of the digital renminbi.
How soon could that happen?
Well, I think they're already...
If China plays it right.
Well, they're already working at it. There are some categories and corridors where things are already being denominated in renminbi. But in terms of regular renminbi is shared, the number 6 or 7 in the SWIFT league tables, but with a market share of sub 2%. And so, again, to shift that to a digital, even with digital renminbi, is going to take a period of time. So I don't think you're going to see the demise of the US dollar anytime in the coming decade.
Bill?
I agree on the timing. I think the route to a more balanced currency basket in terms of global trade would be perhaps digital currencies or perhaps fiat currencies offering something that's additional to what they offer today. And clearly the big impediment for the Chinese RMB is a lack of convertibility. It's even offshore where it's convertible, there are some limitations in terms of what can be done. Do the Chinese intend to use the PBOC digital currency as a mechanism to allow incremental convertibility over some period of time for some populations? I guess so. I mean, it seems like a pretty logical application. It would be very interesting if that started in the Greater Bay Area, since there's been such a policy focus on that Greater Bay Area. Is it going to happen? I have no idea. Might it happen? Sure. And if it does, could that accelerate what would otherwise be a trend towards a greater adoption of the RMB globally? Yeah, I think so.
I want to touch on payments because the pandemic accelerated e-commerce. And I'm just wondering, in the next 12, 24 months, would it be a big year? Would 2021 be a big year for payments given the strides made in 2020 due to the pandemic? Perhaps you can start with Kelvin.
I'm a strong believer in payments in terms of how it get changed and also transformed as part of the digitalization. So that's the reason why I think earlier this year, I think we have the opportunity to acquire FormalPay, a Singapore homegrown QR code digital payments leading fintech players that, in fact, looking into FormalPay, not only in terms of the people talents within that, but also the connectivity they have, with the local merchants. And also the way that, has been extended to the rest of Southeast Asia. We are seeing that as a huge wave, I think, to be one of the core component as part of our digital one-stop solution as a key enabler to support whichever ways that we want to take our digital platform. So I think, there'll be lots of, future way of changing the landscape, including social platforms, initiated payments, biometric payments, voice recognized payments, many different types. I think, but then, the world is changing in a way, making all this, more possible. It's just because that, when the earlier panelists talk about it, that, people become more open towards changes, including even the elderly and also the, of course, the younger ones. So I think now that we really see it as the big moment or the day zero beginning for digital payments starting 2021.
Piyush?
Well, I think you got the year wrong. I don't think it's a 2021 thing. I think it's 2020. Because I think the 2020 has already seen a material and game-changing shift in the take-up of digital payments in country after country for obvious reasons. People couldn't go out. You couldn't use physical cash. Our cash use this year is down by about 40%. And it's all been replaced by digital payments. Volumes for Pay Now are up some 60, 70%. Our volumes in Pay Later have gone through the roof. QR code-based payments. And by the way, it's not just in the consumer space. It is also in the SME and corporate space. So today we have truck drivers all using QR code-based payments to be able to pay the octroi and pay the depot and pay the container. And that's true as much in India as it is in Singapore. So as you look back, I think people will see 2020, where there was a material and game-changing shift in the use of electronic payments around the world. Now, how much of this dials back in years to come? I think you'll see some pushback. You know, when demonetization happened in India, for that 6-8 month period, people didn't have a choice. Everybody went to QR code. Once currency came back into the system, some of it slid back, but not a heck of a lot. So you saw 10-20% slide back, but overall, the economy moved from cash to digital quite materially. I think you'll see that the shift to digital in 2020, a lot of that will be sticky, and it will be the platform and the base on which all kinds of other digital payments will continue to explode.
So 2021, what kind of transformation can we expect then?
Well, I think you'll see a lot more. I mean, the QR code-based payments are across in many markets. In some markets, there's still more opportunities to stitch that together. Many merchants don't accept digital payments. Again, this year has been a seminal change. The number of people who got wired up and number of merchants who accept digital payments. We ourselves were able to bring many F&B outlets in Singapore, for example, to online platforms, create web fronts, but also enable them to accept digital payments. But you'll continue to see that. You'll see more and more merchants moving to accepting some form of digital payment on top of cash payments as well.
Bill?
I agree with all of this, and the merchant servicing industry is really quite fragmented, especially in Asia. So, and I think we saw with the demise of Wirecard, just how low impact that was as a practical matter. But the merchant servicing industries in the U.S. and Europe are far more consolidated than they are in Asia, and I think that's that there will be opportunities to create standards across the Asian markets, obviously not just in Singapore, which is quite a sophisticated market already, but across the rest of Asia, that will bring a little bit more global consistency, I think, and introduce more global players and global platforms. And I think as the merchants themselves are able to become more sophisticated, and it's easier for them to adopt different types of online or digital platforms, I think we can continue to see quite a rapid increase.
You know, when we talk about developing the payment space, what role can the central bank play to encourage innovation in payments?
I think what central banks have already done, either explicitly or implicitly, is to allow non-bank players to participate. So the preponderance in many markets of non-bank players taking on the peer-to-peer payment systems of local economies is very well rooted. China is the obvious example, and I think in several other markets, I think when you look in the U.S. right now, the non-bank, you know, this is a very sophisticated U.S. market, the non-bank market is more important than the bank market. Now the banks are catching up as a practical matter, and that's in an economy which from a financial services perspective hasn't become very digitized in any case. So there's a lot to play for there. So I think by allowing competition vis-a-vis the bank network, the central banks and regulators have already made a pretty big opening up.
Kelvin?
Sorry. The two things which sort of makes the difference between the countries which do this at pace and those who don't. One is put together the infrastructure. Finally, for payments to improve, you need a market infrastructure. So Indians put together UPI. In Singapore, we have the fast network, and on top of that, the Pay Now rails. Those infrastructures are hard for private sector to put together. You need a public-private partnership or a government or central bank-led agenda. So there's one big role which central banks and the governments have to play. The second big role which the central banks have to play is the regulatory framework. So how do you actually put together regulations? We talked about that before. Again, that's a big role for the central banks to play to be able to actually drive this process.
You talk about infrastructure. 5G would be a game changer.
5G would be a game changer. I think 5G with IoT would certainly be a game changer. I think we're on the cusp of machine-to-machine payments, for example. And all of those things are coming down the pike. Now, some of that is not central bank driven. It is driven by the overall infrastructure in the country and the telco rollout, et cetera, et cetera. But yes, I think those could be quite important.
Kelvin?
Yeah, exactly. I want to say in a way that while digital payments, we talk about how it will get transformed. Exactly, when we talk about this year, already seeing the significant amount of explosion. But then it's not just about the merchants getting upgraded to have digital payments enabling, but it's really about their overall businesses, whether they are digitally connected. So I think exactly when you mentioned about 5G, when we talk about IoT, so this must go, comprehensively. It couldn't be just one way that we're talking about digital payments, but it must be an overall digitalization process for the SMEs. So this is actually something that we are working very closely with our partners like Xiaomi, being the largest consumer IoT platform globally, to see how we can transform all these SMEs to address their financial needs, but in fact also their non-financial needs to make them digitally enabled.
2 minutes left to our conversation. 2 questions. What excites you the most about 2021? What concerns you the most about 2021? Bill?
I think if we're focusing on fintech type issues, what excites me the most about 2021 is the fact that the markets will open up dramatically. So, of course, we expect some economic recovery. We expect
some recovery.
Yeah, some recovery. I think it would be great if we could get back to 5% global growth, right? Which is, I would say, only some recovery, given where we're coming from. I think we'll still have some drags. But that, of course, in and of itself is exciting, and we can talk about excitement around vaccines, et cetera. But from a technology perspective, I think what will be exciting is to take this fundamental shift in mindset amongst our customers over the course of 2020, where they needed to change, just out of necessity, they had to adopt new ways of working, and to now introduce this into their mainstream life. And that I think will give us opportunities to do many, many more things to benefit our customers than we've been able to do so far.
What concerns you the most?
What concerns me the most is the possibility of a longer drag than we're all expecting. I think the economic dislocations that we are still trying to digest could turn out to be quite a bit more oppressive than we thought.
Kelvin?
I think the excitement that we see out from the COVID is that people get more receptive towards newer ideas, newer things, newer brands, right? So I think for players like AMTD, we've been fast growing, but then I think comparing to the long years of history of other players, then I think this year is really the year of opportunity, that there are a lot for us to embrace. It's really about prioritizing your own self, right? And then, I think, what are the concerns I think we see are still people talents. Because when all the world, are very much ready and up for the digital age of excitement, then whether we have the enough fin plus tech talent, I think we were talking about fintech overall for operators, then for risk management, for businesses, and for the overall governing of the future opportunities, carrying out, I think something that we will focus a lot into people, talents, cultivation, and training.
Piyush, final word.
Well, I'm going to lift it above the fintech question. I think in terms of concerns, the 2 overarching concerns, one continues to be the interest rate environment. So the low for longer is going to be on us. And for most banks, low interest rate environment, potentially even negative in some countries, is a challenge. The second is on the cost of credit. I think a lot of the issues in the real economy have been somewhat masked this year because of government moratorium programs. So I think you will see a bigger credit challenge across most countries in the world in 2021. So you've got to be able to prepare for that. But on the opportunity side, I do think that we need to see something of a rebound. And, I've always believed in crisis comes opportunity. So if you're nimble and can respond to the opportunities and the rebound more quickly, it gives you the capacity to build out some positions and build out some new businesses. So I think that opportunity will be real next year. I think China in particular, the dual circulation economy does create some real challenges, some real opportunities which you can leverage on. So I think that's an opportunity. And then to what Bill said, I think, or Calvin said as well, I think, like I said, 2020 was game-changing in terms of people's openness to think about technologies very, very differently. And you will see that in many, many different use cases, not the least of which is the sustainability agenda. So I do think 2021, we will see some marked development, and that's going to be a $1 trillion industry. So there are a lot of things to look forward to.
All right, on that pretty optimistic note, Piyush, Bill, Kelvin, thank you so much for your insights today, and thank you for joining us.
Certainly a really interesting panel discussion we just had. A big thanks to Haslinda and her panel for sharing these insights with us. Now, COVID-19 is certainly reshaping the global banking industry on a number of dimensions, ushering in a new competitive landscape. Now, one of the most notable effects of the pandemic, as we just heard in the panel, is that it has acted as a catalyst for digitization in addition to accelerating digital adoption. The crisis has also served as somewhat of a litmus test for the bank's digital infrastructure. Again, that is one of the things that our panel of experts talked about, the need to build up that infrastructure. But at the same time, while banking seems to be changing, so does the purpose of banks. Now, societies around the world now expect banks to help address income inequality, racial as well as gender inequity, as well as climate change, as we just heard, vital engines of growth in the global economy through a multitude of roles. They're bankers. The bankers are financial market intermediaries, they're asset owners, investors, they're employers. So these banks have certainly a critical role to play in sustainable finance. Now, in addition to helping allocate or redirect capital toward economic activities that are net positive to societies, they can also nudge new behaviors among their clients as well as their counterparties. So these are exciting times, albeit uncertain times for the financial services sector. So once again, I thank Haslinda and her panelists, Bill, Piyush and Calvin, for those great insights. Now, incidentally, we tried to get some personal nuggets of information from the panel. We asked about childhood ambitions, and Bill Winters from Standard Chartered said, I initially wanted to be a firefighter, and that evolved into wanting to be a diplomat. And he says, I got both wishes. Now, that is so incredibly interesting because that, in a nutshell, encapsulates what it means to be a leader, isn't it? Firefighter, a problem solver, and a diplomat, a peacemaker. So that's just great. Another member of the panel, Piyush, now he talked about, he called himself an accidental banker. That's what he once called himself. Now, that is an accident that has certainly paid off. Piyush said it only took him a few short months to realize he loved being a banker. So this has been an interesting start to the ongoing 6-episode discussion from the financial services sector. So do remember to continue following the rest of the episodes throughout our different content time zones in order to gather a comprehensive overview of opinions. So on Pulau Ubin, there is a Project Ubin panel discussion covering central bank digital currencies, trade and supply chain, as well as sustaining a DLT network at Ubin Island. Here's how you can get there. From the SFF site, click on the second tab, Online City, and then navigate to the blockchain zone on Pulau Ubin. Across the next 5 days, visit Microsoft Virtual Showcase to find out more about how they are developing digital customer experience and intelligence-driven organization with data and artificial intelligence. The MasterCard Virtual Showcase houses a wealth of information and resources available to view and download. And this covers the full spectrum of MasterCard offerings, from securing smart payments to facilitating digital inclusion and everything in between as well. Coming up within the hour will be the State of the Economy address by Japan's Minister of Finance, Kenji Nakanishi, followed by a session with Deepak Chopra on imagining humanity. So be sure to stay tuned for these upcoming engaging sessions.